Good morning. Can you hear me? Let me know in the chat room if you can hear me. Can you hear me? Okay, thank you, Mr. Rick. Seconds to get started here. Thank you guys. Good morning. Thank you for coming. Good evening from Bali. Good morning, USA. Yeah, sorry, John. There is a technical issue. We'll hopefully have that fixed next time. But yeah, the audio has issues. Yep. Alrighty, let's get started. Sorry about the audio issues. Sound card does not pick up the extra microphones. Alright. Thank you for joining Fox with Stocks. This morning we're going to be talking about the amazing wheel strategy, as I'm sure that's why you're here. Thank you for coming at 8:30 in the morning. We will run from 8:30 to 10 o'clock. Our schedule for today is to talk about the wheel strategy itself from 8:30 to 9. From 9 to 9:30, we're going to look for stock picks before the market opens. And then at 9:30, we're going to see how the market's responding and go over Q&A as well as review some of your stocks that you're interested in. So have those ready at 9:30. And I love it when you guys chat in the chat room. It lets me know that you guys are listening. It lets me know that it just makes it more fun. Also, I've had a bit of technical issues with the internet today here in Bali because of a big storm. So if you keep that chat room active, it actually will help me today. Thank you guys. So the very first thing you might be asking yourself and what we need to talk about is why use the wheel strategy at all. First of all, the risk. It has lower risk than buy and hold, and I'll explain that in a few seconds. It has good rewards, and it is convenient. This is a strategy that you can use at home. You can use it on Monday morning. You can use it once a week. This isn't a strategy that requires you to be sitting in front of your computer, glued to your screen, ready to push sell or buy for 8 hours at a time. This is a very convenient strategy to grow wealth. It also uses the same methods as finding good companies, because that's an important part of the wheel strategy, is looking for good companies. So you actually might be doing half of the work of using the wheel already, because you're out there looking for good companies for your buy and hold portfolio. You can then take those good companies and reliably make 1 to 5% a month trading the options on those companies, regardless of the direction that the stock moves. If it goes up, you make money. If it goes sideways, it makes money. And if it goes down a little bit, you make money. We'll talk about that in a minute. It's also a set it and forget it strategy. What I mean by this is I love the strategy because I know what's going to happen. I don't know what's going to happen to the stock price, but I know when I'm going to get into this stock, and I know when I'm going to get out of this stock. It's not ambiguous, right? And by stock, I mean the stock option. It's not ambiguous. If I sell the 30-day put, I'm going to be in it for 30 days, 45, 45. I might close early. We'll talk about that, but there's at least a time frame on that. You guys understanding what I'm saying? Let me know in the chat room. Low time commitment, we talked about that. You can work a full-time job and still use this strategy. The other thing is, you can get 10%, 15%, sometimes 20% downside protection which is better than trading stocks. Buy and hold. When you do a buy and hold strategy, you have a one-run relationship. You can calculate your downside protection before you enter the trade. Your max profit is known before you enter. And you have a clear recovery plan if the stock goes down. Okay, you don't have that with the buy and hold. Stock goes down, you either cut your losses or you hold longer. This one gives you some very clear recovery plans, and I'll go over that. And like I said, you can close it early for faster ROI. It causes your APR to go up. And I want to make this clear. You do not have to hold to expiration. When you sell the contract, yes, the buyer has the right to exercise it, but you as the seller have the right to buy it back, or to sell more, or to buy more back. You have options, okay? So, why use the wheel? The stocks may change, in other words, the stocks that you're picking, but the strategy repeats itself every month. That is another absolutely critical piece to this strategy, is that it's repeatable. If you go out and you find a stock that shoots up 20%, then you sell that stock, well, then you have to go find another one. Do I roll the puts? Yes, sometimes. We'll talk about that in the advanced section. Okay, quick refresh. What are options? An option is a two-sided contract between buyers, aka long, and sellers, aka short. It allows the buyer to trade 100 units of stock at an agreed upon price, aka strike price, by a certain date. There is an expiration date to options that is critical for us as sellers. We are not selling an unlimited date option. For this contract, the buyer must pay a premium to the seller. That's us. We receive the premium. So it's not a contract between them and the broker. It's a contract between them and the seller, and we're on the selling side in this strategy. So, for example, what does this look like? Space, which is Virgin Galactic stock, it's about $30 today. You could turn around and buy the May 7th $30 call for about $3.50. The buyer has to pay, by the way, remember, this is for 100 shares, so it's $3.50 times 100. You always times the premium by 100. So the buyer must pay $350 plus the brokerage fees and the CBOE fees, the Chicago Board of Options Exchange. We, as the buyer, we receive the $350 minus fees. The wheel strategy is not a spread. It's a simple two-step strategy. First, we find a stock that we like that has volatility. We sell the cash-covered put, so we're short CCP, cash-covered put. Then we wait. If the stock goes up, we're going to sell it. I'll talk about that in a second. But you have to wait. This strategy does require patience. Number two, if you get to the expiration and you get assigned, and Wayne was asking about rolling. We'll talk about rolling later. But if you get assigned, you turn around and you use that stock to sell stock covered calls. So we're selling a covered call, but we're never doing anything naked. There's no naked parts to this strategy. Covered means we're covering it with something. Seller receives ... Seller receives, where did it go? Oh, I think I skipped the thing. When you sell, there's a problem in my slide. Thank you, John. There we go. Thank you, Mr. John. Let's make sure we get you a Discord invite today. Okay. The seller receives the fees. Where was I? And I skipped the slide. If assigned, okay, so there's no naked parts to this strategy. Every step of this strategy, we're going to use a covered put. So we're going to sell the covered put, and then we're going to sell the covered call. When we're selling the put, we cover it with cash. When we sell the call, we're covering it with the stocks that we got assigned with. And we go back a slide because we missed something here. So, buying options versus writing options. When you buy a call, you're getting leverage. You're getting more shares that you can control for a cheaper price. But this is a high-risk, high-return strategy because time is against you. You are paying for time, and when it runs out, actually every day, that time value is decaying. When you buy a put, it's different. You could be doing one of two things. You could be buying insurance on your portfolio or insurance against a big position. If you have a bunch of stock and you're worried that if that stock goes down, especially if earnings are coming up or there's bad news or something's brewing, you can buy a put as insurance. So we're not ripping people off. I want to make that clear. This is not a ripping people off strategy. There's actually good morals behind this. People want these contracts for specific reasons. Institutions and individual investors need to buy insurance for their stocks, and we are providing that as a service. The second thing is If they're not using this as insurance for a stock, they're betting that that stock is going to go down. Or maybe they have a long short position. So they're long another stock. For example, you could be long in Tesla and you could be short in Helion or Neo or some other EV type company. So you're creating a long short spread and you need a put. We're providing that as a service. But again, as the buyer of the put, time is against you. When you are writing an option, writing, by the way, is another word for shorting, for selling, writing, it's all the same, okay? When you're writing the option, you're creating the option that the buyer is going to buy. When you do this, you get monthly premium. That's why we're doing it. We're also getting a lower cost basis. We can say that we're applying that premium to the value of our stock. So we're getting the stock cheaper, okay? We can also create downside protection. Basically, same thing. If we're lowering our cost basis, we're lowering our downside protection because if the stock goes down, we're not hurt as bad. And again, time is on our side as the seller of the option. We want the option to expire. Same thing with the put. Monthly premium, lower entry price, great downside protection, and time is on our side. All right, so let's walk through this. Let's say we go and we find a good company, but it needs to have volatility. This is important. Just because it's a good company doesn't mean that it's a prime candidate for the wheel strategy. The wheel strategy, in fact, selling most options is going to require that you find a company that has volatility. So today, just an example, I'm going to use Space Virgin Galactic, and it is a real company that I have been trading for months. I have now switched to a buy and hold position because of ARC Space ETF, and I'm waiting for them to finally reach space and put Richard Branson in space. So I've switched my strategy, but I've used the wheel to acquire these shares very, very cheap and collect premium until now. So let's continue. Okay, this is what it looks like if you go to yahoo.finance.com and then click the button after you choose the stock, and then you click the button that says options. You're going to get a screen like this. I set it up. By the way, you have to select the date. It's going to go to the closest option first, which might only be a week out. I like to sell my options a month out, okay? So you have to change the date, and if you want it to look like this, you got to click the button that says straddle. Straddle puts the calls and the puts on opposite sides of each other. So now, can you guys see my mouse? Okay? Now, the option, excuse me, is set to May 7th. We have our puts on the right, and we have our calls on the left. And you look down to where these colors are changing on either side of it. I hope you guys can see my mouse okay, You can see that the color changed. That lets you know where the stock price is. Remember, if we go back, it's at $30.47, so it's right here at $30.50. Over here, it shows the calls in the money in blue and the puts in the money in blue. We're not going to cover what in the money means because it's not really relevant to our strategy. Okay? But this is about where the stock price is today. And you look here, if you were to sell it at $30.50, you would collect a lot of premium. You would collect $3.33. But I'm going to explain later why that's maybe not a good idea unless you really want to own the shares. So let's come back down to a lower strike price. In today's example, we're going to use the 26 because, let me get my handy-dandy calculator, and I'll show you this, okay? If we take the premium, which is $1.34, and we divide it by the strike price, not the stock price, the strike price, we're going to get our ROI. So this, if you made this trade, your max profit and your ROI is going to be 5.1% in 1 month because today is April 7th, and then May 7th it would expire, so that's 5.1% in 30 days. Okay, so that's why we're going to use it as our example today. Okay, let's continue on. What I want to do to really drive home the value of this strategy is I want to compare the wheel versus a normal buy and hold strategy, right? Your basic strategy. I'm just going to buy the shares. I'm going to buy 100 shares. What happens? So let's go through some scenarios. see here that I've got 1, 2, 3, 4, 5, 6 different scenarios, but for an example, one of them goes up, one of them goes sideways, and the rest of them go down. So we have 3 different directions. When you buy and hold, you are creating what is called a 1-to-1 ratio. If the stock goes up $1, you make $1 for every share that you have. If it goes down $1, you lose $1 for every share that it has. Basic stock 101, right? So let's take a look at this. If it, scenario A, in 30 days, it goes from $30 to $33. It goes up 10%, you make $300. If it stays the same, you make nothing. If it goes down, you can read it, you lose $300. If it goes to 27, you lose $450. If it goes to 25.50, you lose $600. If it goes to 24, you lose $750. If it goes to 22.5. Now, let's say we're running the wheel strategy on it. Guys, let me know some stuff in the comments. Let me know that you guys are still there. It's really weird to be in a room talking to myself, so it actually helps if you create a little bit of conversation to let me know you're still listening, okay? We're going to say that we open our wheel strategy by selling the $26 put, just like I showed you before. We're going to collect $1.30 in premium. And what this does is it creates a break-even that's lower than the strike price. It's very important you understand that. It's not going to show you in most trading platforms what your break-even is. You have to calculate it yourself. And it's not hard to calculate it, okay? We take our strike price, which is 26, and you subtract your premium, which is $1.30, and then you get your break-even, which is 24.7. And then this is key for my strategy. Thank you, John. Thank you, Hassan. Sorry if I don't get the name right. Thank you, Rick. Okay. Key for my strategy and what I look at, and I don't see enough books talking about it. You're lucky to be on the channel today because it's such an important part of my strategy, is the break-even percentage, okay? You take your break-even price and you divide it by, today's share price, which we're going to just round down to say is $30. Then you subtract by 1 to invert it, and you end up with a 17.6% break-even percentage. What does that mean? Why does this matter? This is telling me exactly the percentage that I have in safety for this stock. In other words, for this option. In other words, if this stock falls 17.5%, I still make money and break even, okay? If it falls 17.6%, I break even. And only, and this is the key to the strategy and why this is so powerful, only if this stock were to fall 17.7%, okay, thank you. If the stock begins to fall beyond 17.6% to 17.7%, that is when we start losing value in this trade. So we're already building in 17.6% safety versus a buy and hold. And I'm going to show you why that's so powerful here. Oh no, we're missing a slide. How did this happen? Oh, that's terrible. That is not a good slide to lose. Okay, we're going to have to fix this right now manually. Sorry about that, guys. Okay, so it's above our break-even. What's going to happen? We're going to collect $130. Let me change the color here. We're going to collect $130. Why $130? That's our max profit when we sold the premium for $1.30. Okay? So we're in this example, if it goes up 10%, we're not making as much as the buy and hold guy. But I'm going to let you in on a secret. It matters when this happens. Okay? If this happens in the first week, you can close this early, buy it back cheap, and increase your APR, and it won't matter that you didn't get the $300 because you're getting the $130 sooner, okay? And then you can turn around and sell another covered put, okay? So what happens if it goes neutral? Well, the buy and hold guy, he makes nothing. He makes $0. But guess what? We're well above our strike price, our break-even price, and we collect $130. What if this goes down 10%? The buy and hold guy, you see, loses $300. I'm sure you guys can guess what's going to happen. We are going to collect $130 because we're still above our break-even price. That's why I'm telling you, You have to calculate the break-even and break-even percentage. It's so powerful and so good. Look at here. The guy loses $450. It goes down to $25.50. We're still above our break-even price of $24.70. We still collect $130. This is almost like cheating at a casino. It's so freaking good. All right. Now, we do start to run into some trouble. It goes from $30 to $24. It goes down 20%. We are now below our break-even. But the buy and hold guy, he loses $600. What happens to us? Let's figure it out. We lose $70. And I hope I'm doing this right because I had this slide fixed and ready before we started, and somehow it got deleted. Let me do the math. And I do math terrible when I'm talking. Okay? $24, our break-even is $24.70, 70 cents times 100. Yes, we lose $70 in this example. $22.50, the buy and hold guy loses $750. He's crying. What happens to us? $24.70 minus $22.50 times 100. We lose $220. Not a good day for either of us, but that's still a lot better than losing $750. All right. Sorry we lost that slide. Let's continue forward. It is 8:52. We're making pretty good time. So, calculations that you need to know. Again, the slide did not do, well, that's what happens. 1.30 divided by 26. Yes, of course, we knew this was 5%. There we go. These are the calculations that you need to have when you're running this wheel strategy. You need to be able to calculate your ROI, and it's really helpful if you can calculate your APR. So to calculate your ROI, you take the premium, that's the $1.30 from before, and you divide it by the strike price, which is the 26. That's how we got to our 5%. Okay? Now to get the APR, if you've already done the ROI, this is easy. You take the days to expiration, you take the year, 365, you divide it by the days to expiration, you get a number, and then you times that by your ROI, so you get 5%. You can also set the formula like this in a spreadsheet. Beautiful. Okay. I don't like showing these half the time because it comes off as a bit cheesy. A lot of people talk about compound growth charts and they're trying to rip you off with some unrealistic expectation. But I do want to tell you that for the last year I have been doing this. I aim for 5% on my stocks and I have very similar results. 10 months later, I've grown a $25,000 account to $43,000 and gotten a return of about 73%, okay? So, why am I showing this to you? Because you know when you sell the put option, what percentage you're going to get before you even start, as long as things go correctly, right? If you have some sort of target that you need to get to, if you're in a retirement fund or your personal fund or you're trying to grow a fund, it helps you to know that 5% times 12 in this strategy is not just 60%. If you compound it and reinvest, you're going to get closer to 80% before it, obviously there's going to be losses, but sometimes there's also additional gains. So sometimes you get more, sometimes you get less. But if you do it correctly and if things go well, you can get this type of growth. All right, I want to show you what this looks like in Tastyworks. Let me take a quick drink. Does anybody have any questions at this point? We're about 5 minutes before it's over. Was any of this confusing before I continue forward? There is a bit of a time delay, so you guys are seeing what I've talked about maybe 30 seconds ago, and I'm waiting for you guys to type in if you have any questions, and it also gives me a chance to drink some of my sangria I made tonight. I have a local cheap Bali wine, costs about $5. It tastes better than the other local wines, but it's still not great. Okay? Oh, yes. So Sanghar says earnings, and you'll notice May 4th. That is a great question. I'm glad you brought that up. You are correct. I do not trade the wheel around earnings. I will talk about that. Now let's talk about it now. It's really basic. When there is some sort of catalyst that is coming, such as earnings, okay, I don't want to make a trade that limits my profit to 4% and the stock could go down well past my break even. So in reality, if we were, thank you, Andre, I'll answer that in a second. In reality, if we were going to do this trade, or if I was going to do this trade, I might only go 17 or 24 days out. Or if I'm really bullish and it's really worth it, here you can look, if you go to 45 days out, the IV is at 101%. If I really wanted to go through the earnings, I would sell the 45 days, okay? I'm not saying you should, I'm not saying I will. I'm just saying what I've done in the past and what's worked for me, okay? Let's continue forward and do this in Tastyworks. Andre, we'll talk about that in a second. We're going to take a little bit of extra time. We're going to go over our time, but that's okay. So here we are in Tastyworks. If you type in SPCE in the top left corner, you will get a screen that looks like this. And these are the different expiration dates right down the middle. And it shows the implied volatility date percentages on the right. You want to aim for some of the higher ones. But you also, I like to be 30 to 60 days out. I might, if this was really high, I might break it and go to 73 days, but that's a long time to hold the trade. So I would be most inclined to look at this 101 and this 31 and this 38. This is what I would look at because it has the higher IVs. Of course, we're not actually going to do this trade because earnings are May 4th. Okay, this is just an example. So let's go ahead and click on one of the dates. Come on, slide. There we go. So here we have the 31-day expiration date. Again, we're looking at the $26 strike price. And here inside Tastyworks, you can see that the bid is 99 cents, whereas the last, you can change this column. You right-click this column, and it will change it to whatever value you want this column to show. And I've set it to last. So right now, we've got a big spread on this stock option price. If you trade SPY or some of the big ETFs, this will be a much narrower, much more narrow bid-ask spread. Okay. Typically, I'm a stock picker. That's how I get the higher returns. So I'm used to dealing with this type of stuff. If you're happy with the return that you're getting at the bid, I will go in at the bid to fill as many contracts as I can, rather than try and squeeze out the difference between the mid. Okay. What you can see, and we'll use for this example, is you could go in at the $1.34 because that's what it last traded at. Let's continue forward. And you can see, but just so I'm explaining, here it shows you in Tastyworks where the in the money is, and you can see up here, here is the current price of the stock. So what we did is we clicked on the bid price. It doesn't mean we're going to sell for that price, but this is what starts us off selling the contract. If we click the ask, it's going to do a B1 because you're buying a contract. If you click on the bid, it'll do S1 because you're selling the contract. So we're going to click on the 0.99. Then we're going to come down here to our limit price, and I went ahead and I typed in $1.34. Okay? And you'll see here there's also a slider if you wanted to slide it back and forth. It's just kind of a cool little thing. The other thing that's really important I want you guys to pay attention to is right over here. It says POP. You guys know what POP means? Probability of profit. Unlike stocks, where it's really hard to tell what the probability is of your trade working, the Black-Scholes model and the mathematics behind options, and you'll see this in many trading platforms, including my scanner and including Tastyworks, it will tell you what the probability of profit. Now, this is purely based on technicals. It's purely based on the technicals of the options themselves, okay, the price movement of the stock and the options themselves. In other words, this is good and bad. The good news is that this is based on the price fixation, okay? The other good news is it does not include fundamental analysis. You still have to do that on your own, okay? But that's the good news. That's actually good news. Why is that good news? Yes, this says pop 75%, but if I've done a ton of fundamental analysis and I know that this is a great stock, I can add what I think, what I'm sort of guessing, but what I feel is the real probability of profit. So for example, if I'm really bullish on this company, I might add 5, 10, or 15 points to the probability of profit that I'm trading at. And in my experience over the last year, I have had about a 90% win rate, if you will, trading at pop 75 to 70 and 80, okay? Because I try and pick good companies. I am a stock picker. Then when you're ready, you click Review and Send. Whoops. Okay. Yep, okay. But before we get to Review and Send, you can also click here in the top left where it says, we were at Table View before, okay? If you click Curve, this will show you your payout curve. This will also show you your risk curve. So here you can see if the stock is above 26, here's where the stock price is today, it's the donut. If the stock price goes down to 26, we still collect our full premium. If it goes below 26 to 24.70, we've already figured that out. We lose a little bit of value, but we still get some value. Pass-in, we will talk about that in the next half hour, actually for the next hour, so stay tuned. Rick, I will answer your question in a minute, okay? This is showing you this gray area here, that this is where you lose a little bit of value, but you still make profit, but not full profit. You want to be in the green for full profit. And here in the red, this is showing you, and it's flat here, because you're going to end up buying the stock. Let's move forward. This is what your confirmation window will look like. Pay attention over here. You always want to check this. When we're selling the option, it should be -1, not +1, -1. You can also double verify it because you'll be getting a credit. If we were buying the option, this would be a debit, D-E-B-I-T, not credit, C-R-E-D-I-T, okay? And you're going to notice that it's going to reduce our buying power by the amount of money that it needs to set aside to buy the shares if it gets put to us. Now you can see that the max loss is $24.66. Don't be alarmed by that. So many people get scared away from this strategy because they see the max loss. Well, guess what your max loss is if you buy the stock? Your max loss is $3,050 per share, okay? The max loss is telling you what your break-even is, and then you only lose value when it goes below that amount, okay? Do not get super scared with this. Of course, if the stock goes to zero, you would lose this much money. We don't want that to happen. That's why we pick good companies, okay? And on Tastyworks, you do get a little bit of margin power, so that you see that my buying power effect is not equal to the max loss. I'm getting about a 30%-ish margin on this. Okay. Other thing that's really important for all of you guys, I know you're new, how do we cancel? Over here, once you've made the trade, once you've hit this, you'll just see a little pop-up that says the order is working. Before it goes through, if you want to cancel, if you made a mistake, or if you want to change the price or anything, click this activity tab on the left, okay, and then right-click on anywhere on your row. Anywhere on the row, right-click, then you can cancel the order, you can replace the order, which is cancel, and then put in a different price or something. You can do a similar order, so maybe you just want to do, maybe you want to go right back to that screen and do another one at the $27 put. Okay, so I'm going to answer your questions now. Let me know in the comments how we're doing so far. Rick Phillips asked, if a person has an account with $100,000, $200K with margin, I look at the notional value of $200K if I'm assigned on every stock, so I don't sell more puts than that amount. How much do you use? Okay, that's a great question, and I don't have a super solid great answer for you because I think to me it's relative. If I'm feeling like the stock market is really good, if I'm really bullish about the GDP and job growth and all these other things, and the stocks that I'm picking, I tend to leverage up on my margin. I tend to max that out a lot. Okay. This month and last month have been a bit scary. I think some of the stocks that I'm used to doing I think are a bit overpriced. Or maybe they're not overpriced, maybe they're normal price, but they're not as cheap as they used to. So I'm ratcheting down on my margin. Okay? I hope that answers your question, Rick. Let me know if it answers your question in the comments below. Hassan said, can you suggest some tickers for safe bets? We'll be doing that for the next hour. I said that. There's another question. Andrei Kovalovya. Privyet. All right. How do you fix losing trades? Okay, there's two ways to do it, and we're getting a little bit more advanced here, but there's the simple way, which is you let it get assigned. If you get assigned and you, okay, this is very important and something that I've learned over the last few months on some of my losing trades. When you get assigned, take the time to go do the research and find out, did the price just go down because of price action, right? Is it just the market? Is it just institutional buying pressure and short squeezes and all this stuff, right? Is it just chart action that's driving down the price, or has something actually gone wrong with the company? I'll give you an example. There is a stock that I planned to trade on. I knew it was risky when I did it, but I kind of thought it was a good, cool idea for a company, and I thought maybe it could blow up and go big, called Rapbola. You can look it up. It was a bad idea. But anyway, the point is that trade went south. When that trade went south, I should have taken the time to go really research the company again. I should treat it like a fresh research and just start all over again and see if I still have a bullish outlook for that company. They did a product demo. The product demo did terrible, okay? And I should have just sold the stock immediately, okay? Which is not part of the wheel strategy per se. Normally, what you do after you do all this with the covered puts, thank you guys for the comments below. If I did a great job, please consider tipping. I'm going to continue answering the question because it's important. What happens? How do you fix a losing trade? If you're still bullish on the company, okay, you want to turn around and basically do what we just did and sell a covered call instead of a covered put. It looks almost the same, except you're clicking over here on the left side, and you're clicking the bid again, and then you're selling the covered call. It's very, very simple. Once you've done the covered put, doing the covered call is very easy to understand and do, okay? And you want to do that, when possible, at a price at or above your break-even price, so that you make that, so that if it gets called away, if it gets called away, you'll make money on the premium and the appreciation, and you have no risk of losing money if it gets called away. There is another downside. If you get too far away from your break-even price, for example, like I did with Rapbola, okay, it becomes difficult to sell covered calls because you won't get enough premium when it's that far away from your new price, and so you have to make a decision. My decision on Rapbola, because I was then bearish on the company, is I should have just sold the stock and walked away and used that money someplace else. Or, if you're still bullish on it, you can sell a covered call, not at your break-even, but somewhere between your break-even and the current price. Try to collect some good premium, but you're hoping that it doesn't go up too fast and gets taken away from you. That's the risk when you do it, okay? The other option you could do, and not an option, I just mean choice, the other choice you can do is just hold the stock. I talked about this yesterday. There's a company called CleanSpark, stock ticker called CLSK. I got assigned on that one. There was nothing wrong with the company. There was no bad news. Okay? And I just couldn't find any bad news, so I didn't sell any covered calls. And then 3 months later, the stock tripled. It went up 300%. And that sometimes happens. So that's another great possibility that can happen with the wheel strategy when you convert it to a buy and hold. You can use the wheel strategy to buy shares at a discount. You don't have to follow through if you're really bullish with the company. I think I've done that with some of my Space Virgin Galactic shares. I've taken possession of the shares, gotten assigned, and then I'm holding on because I think this company is going to have a big win later. All right, it is 9:10. That puts us 10 minutes over the mark for our beginner session. I want to start looking for some stuff. No, it actually is a short covered put. So I call it a covered put because we're talking about the wheel strategy. But thank you. You are also a little bit correct. Okay. Just real quick, I wanted to show you guys, if you want to scan for stocks, you can use barchart.com and you can use, not Tastyworks, excuse me, TD Ameritrade Thinkorswim, okay? If you come over here to scan, and I don't remember everything that I did to get here, but if you find this, the option hacker under scan, you can put in these types of values. Put in your delta, your days to expiration, your return on risk. That's the same as the ROI basically. And then you put in the stock, and the bid price, you're putting it in. Because if you have a smaller account, you obviously don't want to see stocks that are too expensive. And I don't like to trade stocks under a couple dollars. They're too volatile. Like, they're just too randomly volatile. And then you click scan here, and it'll give you a whole list. And we ended up with 143. And it's confusing, but if you come all the way back up to the top right, you can click export and export this to Excel. Okay? You can export this to Excel. It's sort of hidden. You have to come up here and click this little button here. All right. Let's switch modes. Give me a second here to cool down, and then we're going to go look for some stocks. We've only got 19 minutes before the market opens. Here, similar to the Thinkorswim, is I have my own scanner. I already looked through it a little bit today. We've got GoPro showing up again. Let's take a look at them today. Mara and Riot, these are Bitcoin stocks. AMC, meme stock, I'm not going to touch it. Sol for solar, no, I'm not going to touch it because I own so much Tesla that I'm not touching anything in solar, EVs, or batteries. I've already got enough exposure there. Same with Blink Charging, that's a charging company. Tilray, we looked at this a bit yesterday. I'm still interested in it. They had high debt, but I might consider the high debt as a bit of a non-issue. Fuel Cell, Workhorse. Workhorse was a big loser for me because of they didn't get the USPS contract. Kodak, I have enough Kodak. I've been playing with that too much already. Afria, I want to look at Afria today. Plug Power, again, Tesla. Jumia, that blew up like a really big. That was like Jumia is like a Amazon company out of Africa. They had a really low price a while back. It would have been a good buy and hold. 3D printing company. I want to take a look at this. I don't think I'm going to do anything with 3D printing, but I'm going to take a look at it. Does anybody, hey, I want to know from you guys, if you recognize any of these symbols and you've already done a ton of fundamental analysis, let me know in the chat room, because, you know, there's companies like Genius that show up on my ticker all the time. I looked into it. It's not something that I care about or I'm not interested in it. But I'd love to know what you guys think of Genius and some of these other tickers. So if you're trading any of these, if you've done the fundamental analysis and research, I don't really care about the technical analysis. I can do that on my own. This is my own website. It's in beta mode. It's not available yet. And it's just you can get very similar results with Thinkorswim, but I like mine because of all the settings that I've got in it. Fossil Group, they've got great watches. I have no idea if that company is growing, dying, what their future value of that company is. Space, I've got enough shares. SunPower Solar. Snapchat. I've seen that a couple times on my scanner. Let's take a look at it again. Hospital management. There's something I didn't like about this one a while back. Rite Aid, like a bad version of CVS, right? Grow Generation, yeah, I want to look at Grow again. Come on, Turbine. Yeah, somebody told me about apps yesterday. Is the guy who talked about apps there? I'm sorry you can't get this website, Lee. We're still in beta mode here. If you join our Discord and there's some value, we might open up the beta and get some public beta testing. TNA. TNA. What is TNA? That's ETFs. I don't really do the ETFs. Nothing wrong. There's nothing wrong with doing ETFs, but I like picking stocks on my wheel strategy. And Bed Bath & Beyond. We are going to go through a bunch of them today. I just want to quickly go through some of these. I'm not going to spend too much time going through a lot of the analysis today. That's interesting. We've got a big bump here. That happened in late January. And then we've got a slow trend up, and we're mostly just bouncing around in this range right here. Okay? Bed Bath & Beyond. We were at $18.50 before. We're closer to $30 now. This seems to be the new normal. But we had if we were to come back down, we'd probably hit 25.26. 25.26. Okay. This is giving us a $25 put. We could sell for 80 cents. We'd get 3.2% ROI. This is about the price. If I was selling a put, this is about the price I'd want to be at anyway. But this is only it's 23 days for 3%. It's a 50% APR. And it gives me something that's not in tech. Insider trading, they've been buying at 19 and 20. Nobody's buying at today's price. That doesn't mean it's overvalued, but they've been buying in November. So the management definitely felt it was below value there. Wayne Bicknell, tell me what you know about BBY. Let it out in the chat room, baby. I want to know what you know. Okay. December, they lost $75 million. September, they were up $200 million, and they were down $300 million during COVID season. Wow, oh, geez, they took a big hit in 2020. They were down $600 million in 2020, which is more than they made in 2018 and 2019. Wayne, what do you know? What were they doing in 2019? Were they rebranding? Why would they went from making 424 to losing 137 before COVID? Yeah, see, I can already tell you, I probably won't touch this one. You know, take 6025. Yeah, see, I can't touch this. This is one of the very first things I look at when I'm looking at stocks. You come down to the total assets, the total liabilities, take the liabilities, divide it by the asset. That tells you their debt ratio, right? Retail in an uptrend, yeah, they're super high on debt, though, okay? And what I don't like about this, they're so high in debt that banks really aren't going to borrow to them. You know, they're so high at 77%. They're gonna, if they need to raise capital, they can only sell equity. They're gonna issue more shares. And I like the company. They're good. They're a Becky company. You guys know what Becky company means? Becky ETF. Yeah, I'm gonna skip this one unless Wayne convinces me and tells me something amazing about it. All right, we've got Grow Generation. They were super low back in October. You could have bought it at 17. Now it's worth about 50. Yep. Okay. Their earnings is coming up in May. Yeah. All right. They've had a huge uptrend. Cannabis is hot again. Cannabis was hot, then it cooled down. They had oversupply issues. Then we had an election year come in. We had the election change, Democrats to Republicans, so now they're booming again. Republicans to Democrats. We can see that they've got a normal trough here at about $40. Might be a bit of a head and shoulder pattern, might not be. Okay, but if I were to sell the puts, this is what I do. If I were to consider selling the puts, I want to make sure I'm getting my break even at or below the $40 mark, because you can see it's coming down to this range. So I'll feel a lot safer if I'm selling puts and my break even or even my strike is somewhere at or below the $40 range. Let's come and take a look at their assets to liability. Who's Canadian? Always have such low numbers. counter. How are we doing options on over the counter? Anyway. Okay, I'll figure that out later. Anyway. Liabilities 38 million to 355 million. This is what I don't know if you call it small cap or micro cap. Why are these numbers so? Why is it 2s and 16s instead of 2.5s? Total revenue 193,000, so 2 million, right? Total revenue. What do I want? Balance sheet. Why am I looking at this? Total assets 353. Total liabilities 37. Okay, that's good asset to liability ratio on this company. What was our put selling us? All right, so GRWG currently trading at 50.24. It's showing us the $45 put, 247 bid. All right, let's open this up and see what the other one that hits my filter. Yeah, I don't like interactive brokers. I also got bad fill. You should really look into Tastyworks. Where are you from again? I know you said you couldn't get TOS, but maybe you get Tastyworks. Tastyworks is now more international. I did not like the UI in interactive brokers. I don't like the live charts in interactive brokers. And I made 2 trades simultaneously, the same trade, in interactive brokers and Tastyworks because I had my money split between the two. And I lost $6 a contract in interactive brokers, and I got the $6 a contract in Tastyworks. I don't care what commissions are. Commissions are so small. The fill rate is much more important to me. Anyway, GRWG, the only thing that's going to give us the ROI that we want is the 44.50 put. I can get $1.94. I get 4% in 30 days, 4.5% almost. This gives me a cost basis of 42.56. We didn't get below the 40 range. I'm going to have to think about that for a second. We are getting a pop of 72%. I like that. We are getting a cost basis distance of 15%. I'm okay with that outside of tech. All right, cool. Let's go ahead and do that. I'm going to put this one in and see if we get some fill. I want to make a trade today. Probably only going to go 1 on it. Just so that, what was our date? May 7th. This is saying the May 14th for 5%, 37 days. My APR is so close. See, this is why you got to calculate APR. You can see the May 14th, you're getting 5%. The May 7th, you're getting 4.3%. But if you come look at the APR, it's only off by 1. I'd rather do a shorter trade. Always use APR to compare your trades. May 7th. When is earnings? Because earnings is not showing up on my Tastyworks. Okay, May 12th, May 7th. We'll do it. We'll go for it. I might close it. I'm going to try and close this one early, though. I don't want to get too close to it. All right. This is like twice as hard to talk and trade at the same time, but I'll get used to it. 44.50 put. 44.50 put. $1.94. We got a huge spread. I can probably squeeze some out on this. Okay, this is recommended $1.94. So see that we've got this huge spread. So I'm going to do 2. I'm going to actually do 2 contracts on this. I think I've got the money in the account for it. This shows us a pop of 68%. The pop in my scanner will show up differently. There's some slight different calculations, but it's usually not enough to matter. Okay, $1.94. Okay, I'm going to do one at the $2. So we're going to get $200 in credit. Then you got to pay all these fees. It's not that much. It's $1.14, and see, I'm only paying $1.14 in fees for this contract while making $200. And if I did this in interactive brokers, I'd get terrible fill rate. I would much rather come here. You guys get to see my other accounts there for a quick snapshot. I have different accounts for different strategies. It's not like I only talk about the strategy in the account that it's working. Each account is a different strategy that I test. Yeah, cool. So I'm going to put this one at 2, And then I'm going to do it again. 44.50, right? I'm going to do this again, but I'm going to come in right between the mid and the bid. I'm going to try and get, let's go 225, 224. Yeah. And if this one doesn't fill, it's okay. I hopefully I get one at the other amount. So you can do that when you've got these large spreads. What I found is I don't usually go for the mid or the last, because if I don't get enough fill, then I'm angry, because I'm going to get 5% or whatever percent at the bid anyway. So I try and get max fill at the bid. But when there's this much of a spread, I'm going to try and get some. I'm going to try and get some more, squeeze some more out of it. So cool. We've opened up GRWG. I'm going to skip the fundamental analysis on it. You guys shouldn't copy me exactly. Don't be as risky as me, right? Do as I say, don't do as I do. But sometimes you put a trade on, and then you go and figure out more about it later, or you do the research 8 hours and then you put the trade on. But I want to do something with you guys. I want to make a trade today. So Walmart does crypto and stocks, but for some reason they show, if you just type in RID, they're going to show you the crypto first. Walmart is a new company. I don't know how new. I really like their setup, but their accuracy and some of their UI is a little goofy sometimes. What do you guys think about this cross here? We've got a crossover on the red, right 8. I want to know what you guys think about this crossover here. Earnings is April, so okay. Earnings April 15th, it doesn't matter. We're going to skip this. Next. Community Health Services. I've looked at this company before. I don't know why I didn't do it. Let's take a look at it. Oh, we had a couple. Look, man, this thing is crossing constantly. 1 cross, 2 cross, 3 crosses. This thing crosses every 3 months. Earnings date, 27th of April. Okay, we're probably not going to do this, but I just want to come look at their asset to liability real quick. Oh, geez. Yeah, this is why I don't do this. Look at the 16, the 17. Yeah, I just avoid these, you know. There's 9,000 stocks to go look at. Why am I going to do one with so much debt? Let me know in the chat if you're still listening. I feel like I'm alone. You guys are probably trading. All right, we've had a big crossover here, and this thing tanked. Might be coming back up. Earnings April 20th. Yeah, it's hard to trade now. All these earnings are coming out so soon. See, I like this. This is okay debt to asset ratio. 2.6 divided by 5. Right, 52%. They're still a tech growth company, still losing money. Yep, market opens in 1 minute. By the way, when the market opens, if you're still with me, I will be taking Q&A. We'll be talking about any type of questions you want to ask. I'll be reviewing your trades or trade ideas. And if you stay till 10, we will be handing out Discord invites, free Discord invites, so you can join our chat group. 3D systems, 3D printing, good long-term growth. Whoa, that was a big winner. What is this number though? This is Walmart, why do you do that to me? I don't care about cryptocurrency. Make stocks first. I do like cryptocurrency, but come on, if I'm searching it, make stocks first. Okay. So they used to be at $10, now they're at $26. They had a huge bump in February, whereas a lot of other stocks are going down in February. Oh, boom, we got it. All right, you guys see that? We got filled on both of them, 224 and 217. Currently, did I put that in at 2? I put it in at 217. I forgot what I put that in at. Anyway, we got filled on both of them. And I think I got filled 17 cents above my asking, right? So that's good fill rate. Whereas if I did it on IBKR, for sure they'd only give it to me at the 2 because that's what I entered it at. I get an extra $17 on Tastyworks paying for a whole bunch of fees. That takes care of the commissions. All right. 3D systems, 2580. Yeah, there's not much action. There's not much history at this range. I don't know where the real trough is. Okay. 302 to 733, that's good debt. They are spending 149 a month though, so that could rack it up really quickly. Sorry, that's annual. Let's switch back to quarterly. Okay, that's much better. So we take their debt, figure out the ratio, 302 divided by 733. I want it as far away from 70% as possible. We've got 30%, 29% of cushion. I like that. Next thing I look at is I want to see how much they're spending each quarter. Okay, well, they've got some up and down here. They're not stable. Let's spread the difference. Let's say they're spending 40 a month. It's going to take them a long time to go through all that money. 733 minus 302, you get 431. Of course, divided by 40. So these guys can go through 10 quarters before they really run out of money if they keep their spending as the way that they're spending. That's how I do like a quick calculation to see if I'm working with trash or if I want to look at this company anymore. Earnings date is May 5th. $3 billion market cap. They're not super small. Insider trading? No? Okay, insider trading. February. They sold. January, February at 30.35. Today it's at 26. They last bought at 21. They last bought at 11. No, they sold at 11. Jeez. I wonder if this guy was getting canned. Jeffrey, President and CEO, he made a bunch of money buying at 5. Okay. I'm gonna put Triple D as look later. I want to look later at Triple D. Okay, so we're gonna leave that up. Aspia Pharmaceuticals, a Canadian company, trading at 21. Last support was about 17. Good job, Wayne. I hope that works out for you. Thank you for sharing that. That's awesome. All right. Aspria, 2150. By the way, this is the time if you guys have questions, if you have trade ideas you want to talk about, this is the Q&A session while we make our trades. Go ahead and shoot in the comment section, the chat section, and I will try to answer it while I look for trades myself. Yeah, 918 by 281. No. 918 by, whoops, come on calculator. 918 divided by 2810. 32% levered. We made money in, when is this, February 2020, before COVID. Then COVID comes, they lose 100 million, then they lose 5 million, then they lose 120 million. They're bouncing all over the place. Cannabis, we had the cannabis bump. I like cannabis though. Ah, damn it. Earnings 12th. Okay, I gotta skip this for now. I gotta come back to this later, after the 12th. Alright, let's look at those first. Earnings, May 10th. Okay, we can actually look at this one. Alright, we are actually, this looks kind of good. We're actually at a bottom, we got the crossover there. Well, we're at the support level already. The other support is about 1770, 1780. Revenue is up 20% quarter over quarter, 26% year over year. These guys are doing a big merger though. I didn't like their debt ratio. Great question, Lee. I'm always trying to make trades, so I don't really wait. As long as I care about my ROI more than I care about the VIX, so I don't care what the VIX does. If I can find good companies at 4 or 5%, then I'm going to do good companies at 4 or 5% all day long. Palantir and Teladoc. What do you want to do, Greg? I'll look at them for you, but it's even better if you tell me the option, the date, and give me the whole option chain that you're considering. But I'll take a look for you, Mr. Greg, because you asked. Thank you so much, Mr. Greg. Let me do GoPro first, and then I'm going to do Palantir next, right? Earnings date, May 6th. We can work with that. Oh, they're trending a bit high. 7, 8. This is the company that could have been great and then messed it up, GoPro. They had everything in the world going for them, and then they slowed down. Selling the $11 bid, only 58 cents. It's not going to get us a good cost basis. I'm going to skip this one, I think. If I could get my cost basis closer to 8, I would do this, but we're not going to get a decent return at that. Yeah. All right, got to skip GoPro. I'm not super bullish on their outlook anyway. Arturo, that is a fantastic question. I love putting in my trade hours and hours and hours before the market opens, then watching when the market opens, and if the stock is moving against me, I cancel the trade. But if the stock stayed the same or is going with me, not against me, I have the advantage of first in, first out because I put my trade in ahead of everybody else. So I love putting in my trades as early as possible before the market opens. Put them in, after you get done with post-market hours, feel free to put in your trades for the next day, but then just make sure you check the price action in the pre-market to see if you want to cancel that trade or not. But you get an advantage. The sooner you put in your trade, you actually get an advantage against other people because it should be first in, first out on your brokerage. All right, Tilray, we did that one. Okay, let's jump at Palantir, PLTR, right? PLTR. I'll tell you off the bat, I don't know how I feel about Palantir. I keep whiffle-waffling on them. But let's go ahead and take a look at it. First off, I got to find some option chains on them. So let's go to, I got Tastyworks open. If you guys don't have Tastyworks, you just go to finance.yahoo.com. PLTR. Let's go 30 days out. IV is 73%. You might get a trade out of this. When is earnings? Earnings is May 18th. I want to go 30 days. I don't want to go 37. Okay. First thing I want to look at is right at the money, because if it's not, 8, 9, 10%, then we shouldn't even really, for my strategy. Okay, so who asked this one? Greg Holman. Okay. They're only getting 7.3% at the money, so it's unlikely that we're going to get 5% out of the money. Maybe we get 4%, but this is a tech company. I prefer to get 5%, but let's take a look at, let's see if we can help you out here. That's kind of close. I don't think we're going to get 5%. 0.82 divided by 21, 4%, right at 4%. Okay, let's keep looking at this. I'm treating this like I'm doing it for myself. So, okay, I get 4.5% at the 21.50. That would give me a break even at 20.50. Okay. So 20.50. Let's go look at their chart. I prefer to look in Walmart. I just like having all the information there. So 21.50. I'll tell you what, you're getting pretty good support. I don't like being totally basis on technicals, but when you're live trading, it is nice to go with the technicals because it's so quick. All right, so 21.50 is not a bad break even. It's not a great break even. If we could get our break even down to 19, I would really like that. But to get the ROI that I would want, we got to be at 21.50. Greg Hammond, how bullish are you on this stock? Because what's going to happen is if this thing dips, you're going to own the stock. You're not at a really safe distance. So how comfortable are you owning this stock? Got to know. Is this a buy and hold? Would you be happy if you owned the stock for a year? I think that's a really great barometer for your trades when you're doing the wheel. Is just ask yourself, would you be happy with this for a year? If not, why not go find another stock? There's 9,000 stocks that you can trade. Palantir has good debt ratio, only 43%. These guys went public. Why am I only seeing 2 quarters on the quarterly income statement? This is weird. Anyway, they lose $600 million a year. Sorry, they lose $600 million a year. At that current rate, they could survive 2 years before they're in real trouble. Okay, yeah. So if I wanted this, it's a Cathy Wood play. I know I like Cathy Wood. I love Cathy Wood too. The only thing I don't like about Cathy Woods is they have so many stocks in their ETF that I still like to go and pick and choose the ones that I want. I don't just like want all of her stocks. I did really good with Illumina with her. I bought and hold 100 shares of Illumina. I don't even sell the covered calls. I just want to hold that one forever. You're not seeing any. Okay. At least on Walmart. Let's go try Yahoo. I'm not seeing their growth and their beta. Give me a second. You guys should also be looking at the PE ratios, in case you haven't heard me say that yet. You haven't, because I haven't said it yet. Oh, that's good, Wayne. I'm really torn on Workhorse. Yeah, sure. I'm trying to look for their quarter-on-quarter growth rate, their earnings. Okay, there's just not a lot of data showing up for Palantir. So I'll tell you what. If this was me and I was following Cathy Woods and I just love her stocks and you're seeing good ROI, you can get good ROI at $21.50, going in at 99 cents or $1. You're not going to get 103, 102 probably. You're going to get a 4.5% return, and you're at an okay entry price. It's not like this isn't like the most amazing wheel trade ever, because you really want to be in a break even about 19 or better and still get that 4 or 5%, but you're just not going to do it with this stock. So what I would do, I personally would sell the $21.50 for 99 cents, and just be happy if you own the shares. June 21. Abhilash wants to do covered short put for 35. What do you mean 35? June 21. Are you going in the money? Am I getting this wrong? June 30. Oh, you mean June 30? What are you saying? Clarify for me. I'm a little bit drunk. All right. Did I miss any other questions? Teledoc. We can do Teledoc, but I think Greg might have left. I'm not sure. Oh, that's interesting. We've got 20 viewers, but only 4 of you in the chat room. I wonder why only 4 of you in the chat room. Wonder why that happens. The people not logged in, and so it doesn't put them in the chat room? Teledoc. I haven't heard of this. Oh, it's a health company. Okay. Teledoc. I was thinking documents like DocuSign. Teledoc like the doctor. That's more interesting. Arturo, sure. Let me jump back to the slide where I do the calculations. Okay, where is the slide where I do the calculations? Oh, there we go. So, you're going to do the 30 days. You take the premium, which is $1.30, and you divide it by the strike. It's kind of the opposite of what you think it is. You'd think you would take the strike and divide it by the premium, but it's the other way around, and you get your percentage. So 0.05 is 5%. All right, let's keep going with Teledoc, because I like the idea of having some stuff outside of tech and having some stuff in health. Whoa, that's a chart pattern. Look at that. What is happening here? Oh, that's what's happening here. We had a massive run-up over the last couple of years, and now we've had a massive pullback. earnings are 28th of April, so I probably don't want to touch that just because of that. $182, so this is a rich stock. You got to have a nice fat account for that. Whoa, revenue quarter over quarter growing 144%. That's great to see. I don't know much about health, but that sounds good. PE ratio is not being shown to me. We don't know what's happening with the insider trading because it's options, so they're probably just exercising their employee options. We hope. They were selling at 198. They're trading at 182. That's not a good sign. Who wanted this? Greg. If Greg's still there. This is one thing I don't like, and it's recent. They're selling at this price. They're not buying at this price. Their CEO is selling whatever the hell SVP is, corporate strategy. Senior vice president is selling. Business development is selling. Chief legal is selling. Chief marketing officer is selling. The whole team is selling at 196, 183. I wouldn't touch that just because of that. You can see there's something going on in the company. You want to wait for this to drop. I want to wait for this to drop. I shouldn't say what you should do or what you should feel and think. I should try and use the word I so much, but yeah, Teladoc, I'm going to take a pass on it. If it drops, then look at it again. I can't touch NEO. I can't give you an honest opinion about NEO because I think anything that's not Tesla sucks. I'll help you do the math. Okay, let's take it. What is this, June 35? I'll look at it, but I'm telling you, I'm super biased against NEO because I just don't give a crap. What are you saying? I don't understand June 35. Why are you saying 35? Okay, so that's the strike price you're looking at. Okay. Excuse me. But yeah, they got $5 spreads on their strike prices. CBOE needs to add some more spreads in there. So, whoa, you're right after May 27th. So you're coming after earnings. I don't think NEO earnings are going to be good. Why would it? They don't make cars. They make PDFs. Sorry, man. I'm super bearish on NEO. All right. You would get an 8% return at the 35. You had a break even of what? 35 minus 2.86. You'd have a break even of 32.14. Can I look at the chart here? Yeah. By the way, there is a bug in Tastyworks. You got to flip back between the dates to get the real chart. Yeah, there's no. You're already at the bottom of the support level. Okay, so 35 is your other support level. You'd be $3 below it. I'm gonna tell you I would take a pass all day long just because it's EV and it's not Tesla, and none of these companies are real besides Tesla. Honestly, they're just PDFs, man. Yeah, I don't know what else to tell you. I'm not gonna touch that one, and I'm not gonna give any more comments on it. If for some reason you love it, that might be an okay entry price for the wheel. You're getting 35 minus $3 almost for it. You're 72 days out. Why do you want to be 72 days out? Okay, your theta decay on the wheel strategy when you're selling covered short puts, it's going to really ramp up in the 90, 60, and 30 days. At 72 days, you're a little bit far out of it. Why not come back? Yeah, why not come back before the? Yeah, here. Okay. Abhilash. Sorry if I'm getting your name wrong. I wish you could type it out in a way that I could read, but I can't read phonics anyway. I'd much rather look at the May because you're getting a higher implied volatility. It's before the earnings. And if we come back down to the 35, you're getting 204. Yeah, because you're only anyway. Let's do the math for you. 204 divided by 35. I don't know if I hit anything wrong there, so I'm just going to do it one more time. 2.04 divided by 35. You're getting 5%, but you're getting 6%, but you're getting it in 44 days. You're not getting it in 30 days. And you're not getting it on what I don't think it's a good company, man. You know, I would pass on this all day long. But if for some reason you've got some insider knowledge that this thing is great, then, you know, why not buy the stock? You know, if you really like NEO, this so much. I would buy the stock because you're not getting that much. You're not getting that much premium. You're getting okay. You're getting 365 divided by 44 times 5.8. You're getting a 48% APR. It's okay for the wheel. It's not a bad idea. It's just not great. And if it's not great, you've got 9,000 other stocks to choose from. Lee says, I'm saving up so I can do the wheel on Tesla. Any concerns? Yeah, I tried to do that. I did that in my IRA. I got stuck with the shares at 800. It's okay because I'm going to own the shares for 5 years. And I want to set up my IRA to do Tesla. And so I'm happy to own the shares for 5 years. So I can just hold it to come up. But make sure that you can hold it. And if you're going to do Tesla, if you're going to do stuff with Tesla, be really careful with margin. I've got Tesla in a margin account, and that's the only thing that's bothering me. I want to get all my Tesla shares to cash account. Avilash said the 35 strike price for June. Yeah, we're on a bit of a time delay. I already talked about that. If you are going to do, if I was going to do this trade, I got to stop saying you. If I was going to do the trade, I wouldn't go out to June. There's no reason to go through June. I would go back to the May before earnings, before they get wrecked for having only PDFs. You get a higher implied volatility, so you're going to get a better return on your money. You're going to get 6% 44 days. It's not amazing, but it's a 48% APR. Yeah, exactly, Lee. If you're happy to hold Tesla forever, you can do the wheel. The only downside to doing the wheel is if it shoots up past your, like let's say you get assigned shares, and then you got to sell the covered call. If it shoots up, what do? Do you buy it back at a loss? I don't know. Do you try and keep rolling up and it keeps shooting up? That's what I'm doing in my IRA. My IRA won't have any tax implications, so I'll do Tesla in my IRA. But in my main account, I'm just buying and holding. I'm not going to try and do anything fancy with it. All right, 7 minutes until we give out the Discord invite. So stick with us, even if you're not listening, paying attention, or using the chat, because you only got 7 more minutes to get some Discord invites. Okay? But if you have any questions, now is the time. I've already done my trade for the day. I'm not going to find anything else. I put some more on the back burner. I'm going to go research them tomorrow. So maybe I'll trade on them tomorrow, but I'm not going to trade on them today. We opened a couple positions. What did we do? We opened a couple positions in GRWG. We got $224 coming down the pipe in 30 days. That'll pay for a few sushi rolls. That'll be great. We got $217. We got filled. So we got one. We went in one that low. We went one higher. We got both of them filled. That's great. That's not a bad thing. That's fantastic. Yeah, Wayne, I like Walmart too. I hope they get their act together. They've got some problems with the accuracy and some other things in the UI, but I hope they succeed because I think, the thing is, Yahoo is doing such a bad job on everything else. If Walmart kills their finance section, I think Yahoo's done, dude. We can short Yahoo. AI ticker. So AI ticker. Is this the right company? What is this? Anyway. AI ticker. What is AI? C3.ai. What a crazy name. All right. Obviously tech. Yeah, if you guys love this, I appreciate any financial tips that you give below. Make sure you stick around for our Discord. And very important, excuse me, my alcohol is coming back up. Very important. If you love what I'm doing, please share it with your investor friends. Please share it on social medias. We don't have a big marketing department. We've only got one assistant here. We're trying to build a website and all this other grand stuff and become more official later. But the best thing you can do is send me your money and then send this out to your friends. Okay? AI, finance, specialized finance. Ooh, I do not like finance. The only stocks I've had go to zero have been in finance. But let's take a look at this because you asked. That is a horrible chart pattern. Yeah. All right. Revenue quarter over quarter growing at 40%. That's amazing. $7 billion company. They're not small. Earnings come out in June. That's nice and far away. I like that. Insider ownership. I haven't even been talking about this with you guys. Insider and institutional ownership is very high. So you have a lot of powerful people that want to make this company go super high. That's good. PE ratio is not really accurate, so we can't really look at that here. Insider trading. We got sell at 75.85. We're below that mark, so that's good. Will it give us any more information on insider trading? Can I go before 2021? Buys. We had buys at $2.52. Jeez Louise. All right, J-Rock, Richard, and J-Rock again. Okay, so these two bought a ton of shares, and they are probably selling. No, they're still holding. Okay, that's good. If they were selling, then you'd figure everyone is just selling. But this J-Rock and Richard, these guys might be the co-founders. I don't know. 57.51 in finance. That's good. They've got some gray hairs in finance. That's important. Debt to asset liabilities, 30%. That's good. Quarterly, they are losing money. That's not good. Annually, they are losing money. That's not good. All right. I mean, I see some pros and cons here. I don't know what specialized finance is. I don't know about the company. Let's take a look at the company. Let's go to profile, see where they're based out of. Wow, they're in San Francisco. What do these guys do? What is C3? I have no idea what C3 is. Hey, who talked about this company? Who talked about this AI company? Where is you? Sachin Relia, I'm interested in this. Tell me what you know about this company. I want to make sure you join our Discord group, and I want you to tell us about this company. This is interesting. All right, let's take a look at this. So the chart pattern doesn't really tell us much. This is a weird chart pattern for me, anyway. Their quarter-on-quarter growth is fantastic, so you could have a real winner here, but they're still losing money. They had a bunch of insider sales, 75 to 85. So the next time it gets up there, they're going to sell again. That's what I would expect. I don't like that. I don't like that they're losing money. I do like the sector that they're in. I do like their liability to assets. This feels like a startup company with that type of valuation and everything that's going on. This is a weird company, man. But this could be a winner. Let's see if it's wheelable. This might be a buy and hold rather than a wheel type of company. Ooh, we got 10% at the money. That's good to see. If you get 10% at the money, you can probably buy 5%, 6% out of the money. 2.05 divided by the 55, 4% if you want to be safe. 3.7 divided by 60, 6% if you want to be dangerous. Danger zone. Its AI, as you mentioned, have puts at 65. You're right at the money. Okay? But seem to be long-term bullish. If you're selling puts at the money, you're basically asking to buy it at a discount. That's the way I think about it. If I'm selling puts at the money, I'm basically rolling the dice, flipping a coin, and I'm saying, you know what? I don't care if I get the premium, and I don't care if I get the stock. And that's the type of stuff you might do on like a Tesla. If you want more stock, you might do it. I did it on Space a couple times, I think. No, I did it on Riot. When I wanted Riot, I didn't care if I got a sign. I was happy to just buy it, so I might as well sell puts at the money, and then whatever I get, I get. But when I'm doing the wheel, I want to be out of the money, and I want a certain percentage out of the money. I want to have about 15 to 20 or more. I want to have at least 15% downside protection when I'm doing the wheel. Okay? But this is all relative, right? So if you really love the stock, then yeah, you can be more aggressive. You can give up some of that downside protection. You can break all the rules. You just got to know when you're breaking them and why you're breaking them. So they do AI, but what do they do with the AI? AI is in everything. I want to check this out. I'm going to write this down. I got to make a list of these stocks. I'm going to research it tomorrow. And Sasha, okay, it's 10 o'clock. Sorry. We need to give away our Discord invites. Hold on for a second. Okay. These are only good for an hour, so you must use these, okay? You guys ready? Hold on. All right, guys. Yeah, I've looked at DKNG a while back. I don't remember, but I haven't traded it. All right, there is your Discord invite. You have 1 hour to use it and sign up. Otherwise, you got to attend another live event. Thank you guys for staying till the end. I want to keep talking a little bit. I'm a little bit good on the happy juice now. And Mr. Sashin, I hope you join our Discord group and tell us all about this AI company, because that is a sector that I want to be in. It's still tech, but I want to know about good AI companies. I want to know what they do, and I want to know what you find. You seem super bullish on it if you're ready to buy it at 65 and ready to sell the puts right at 65. Although $6, you're getting $6 premium at 65, so you have a cost basis of 59. Let's take a back look at the chart again. It is in a downtrend, though. I hope you're really okay with it. Yeah. But the bottom of their support was 60. So selling the puts at 65 for 6, that basically says that you're willing to buy it at the support level. And if it doesn't touch the support level, then you're going to make 10%. Man, I wish I knew more about this company so I can make this trade, because I kind of like that idea, right? If you're really bullish on this company and you can get a 10% premium or own a company that you want, and you're buying right at the support level, that's kind of sexy. Are you still there, Sashin? Tell me about this company, man. Sorry, I'm going quiet, reading other texts. Yeah, Sasha, make sure you tell us about this company inside the Discord chat. I'm kind of interested to know what you know. All right, guys, it's 10:04. I've had a really great time. There's not a whole lot of activity going on in the chat room, so I'm going to go ahead and end this. Thank you so much. We'll probably do another one on Friday. I got to decide if I want to do this 3 times a week or 5 times a week. I think for sure 3 times a week is pretty much guaranteed. This is a lot of fun. I just got to decide if I want to do 5 times a week. All right, guys. Thank you. Have a good morning. I'm going to have a good night. Yes. Okay. Sashin says, yes, so bullish as UBS listed as one of the 15 with upside potential at the support level. I don't know what that means. UBS listed as one of the 15. Yeah, tell me, but I always want to know about the fundamental analysis of a company. Even somebody else's watch list, somebody else's analysis, some other company, Kathy Wood talks about it, whatever. I want to know more about the company myself. So I'd love to know if you've done the research. If you haven't done the research, it's okay. You can say you don't do the research. It's okay to be a gambler a bit like that. But I want to look into that. So, oh yeah, I got to write this down. So, we did a trade today. We looked at a few trades. I'm going to look at AI, and they got the greatest stock ticker symbol in the world. Not sure how they got that before everybody else. Tilray, I don't know about that one. AFIA, I think I wanted to look at AFIA later. Triple D, I want to look at Triple D later. I want to research that one tomorrow. Cool. We actually got some stuff done today. Today's been a productive day. Awesome, Jose. That's fantastic. I wonder where you're driving. That's cool, yeah. I guess you can listen to YouTube while you're driving. You guys see that I play Rocket League. That's what I do when I'm not trading. All right. Was there any other stocks that I wanted to write down before I end this? Neo, I definitely don't want Neo. Sorry, man. I hate that company. Now I'll look at DKNG tomorrow. Cool. Laser blink, and you're playing all the meme wheelie type stocks, Mr. Wayne. You're all over it. I tried doing that shotgun pattern in I think it was September of last year, where I was pretty much trading wheel on anything that looked tradable. And that's the only time I got a couple big losses. One of the stocks actually went to zero. No big plays like that, but it wasn't a big deal. But I typically don't shotgun anymore. All right, 10:07. I'm going to sign off. I've got 4 stocks to research tomorrow. We made 1 trade. That is a win in my book. Fantastic, Wayne. That is always great to make a bunch of money every week. And trading options sure beats working for a living, right? I know it's work, but, some people actually work. All right, guys. I hope you've enjoyed this video. If you're watching the replay of this, I highly recommend that you come and attend a live event, ask us questions, share it with your friends. By the way, check the description box below. We've got links to affiliates. I've got links to my tip jar. I want to help you get rich. You guys can help me get rich. We can share information. We can share the wealth. There's plenty to go around. You attend the live conversation. You get to ask questions. You get to possibly follow me on a few trades. You get the Discord invite. It's fantastic. I'm signing off for the night. This is Buddy from Bali. Have a wonderful day. Thank you for watching Fox with Stocks.